Hi, I'm Keith Atto. This is a Monday morning update, September 21st, 2009. We're traveling today, so a little bit different background. Also, note the disclaimer. This is not investment advice, and before you act on this information or any other information, please contact your personal financial advisor. After last week being an up week where the S&P and the Dow they were nudging 52-week highs, we can expect a bit of a pullback, and that's what we're having this morning. I wouldn't be too concerned about it. Make sure you have your stop losses in. Also this week, expect fund managers to be switching perhaps from cash and bonds to stock for the quarter end, September 30th. And that's 3 days before quarter end because of the clearing. They'll want to do that. And so there may be a little bit of an uptick in stocks because of that, or at least the pullback won't be as great as people expect. Also, never underestimate the United States in general and Obama specifically. You may like him, you may not like him, but he is an extremely effective politician and knows how to get his way, and has a team around him in place to do it. So he's battling the healthcare industry right now, but they don't never be deceived. He's a man with a mission. Also, we have the German elections on the 27th. It looks like Angela Merkel will retain control. And we have Iran, which we have the United States pulling back as far as their missile program in Eastern Europe. We'll see if that's to placate the Russians in terms of Iran, and how that plays itself out. But certainly embargoes are going to be very difficult to put in place. It's very difficult to put an embargo on crude oil. Too many people want it, and it's much too easy to transport. We also have our three friends: China, the Euro, and the Baltic Dry Index. China overnight had a bit of a rough start. Asia in general, Europe also, and it'll be interesting to see how that plays out in the overall market this week. I'd expect a bit of a pullback, but don't be surprised if the pullback is marginal. Also, we have the Baltic Dry Index. Baltic Dry Index is down now to 2356, but three of the sub-indices, there's four indices make up the Baltic Dry Index, three of them are up, and the only one that's down is the Capesize Index, and that's because of the piracy issue that being reduced and under control to a great extent. And it's an indication that the global trade is picking up. Even in the container ships, there's activity almost around the globe, and even in Russia, even in China, there's a noticeable uptick in chartering container ships for finished product. So, by and large, a positive sign for the economy and the world economy in general. We also have a busy week this week as far as reports are concerned. Today we have the leading indicators coming out at 10 o'clock. We have Wednesday, the Federal Open Market Committee report, where people are looking for signs that the economy is improving and that interest rates will remain low. Thursday, we have the G20, where people are looking for a strategy from them to go from the easy money credit that we have right now to a slight tightening to try to manage any potential inflation in the future. We also have initial and unemployment claims coming out on Wednesday, as well as existing home sales. Friday, we can look for the new home sales and durable goods. So, once again, know your rules, trade your rules, keep safe, good week, and I'll be back on Friday, and take care. Bye for now.